Ladies and gents, welcome back, guys. Welcome back to another Raw Kitchen Table Talk. Today we're going to call it the floor talk. I want to sit on the floor while making this video. It's more comfortable. Guys, I want to prepare a lot of you traders out there for what's coming psychologically. Making sense of the markets is going to be difficult for a lot of people who haven't experienced the bear market or coming out of a bear market. A lot of you day traders, penny stock traders, high cap stock investors, and futures traders. It's all going to be the same scenario, the same thinking and psychology. Look, you've seen what happened with inflation a few days ago, came down slightly, and you got this pressure lifted off the markets, and the markets went back up by 1,000 to 100 points in Dow Jones and NASDAQ. So that's going to be the catalyst going forward. Inflation needs to come down month after month for investors to say, you know what, we're coming up fully. But they're probably going to be late. By the time they put their money in, you need to actually understand what happens after inflation comes down. Because inflation only contributes to 20% of the stock market crash. Inflation and Fed hikes. The rest of it, the other 20%, is going to be GDP and earner reports. So every time the market gets lifted, remember, there's this spring, there's this pressure on top of it, which was inflation and Fed hikes right here. It comes down slowly, you get a push. We don't care about that. We don't care about that push. What we want to know as day traders, if you're a penny stock trader, if you're a futures trader, we want to know what's the reaction going to be. Well, in penny stocks, if we get the worst performing stock today, all-time low, the bottom of the bottoms, has been beat down because of external factors and actual fundamentals. You have this penny stock right here that gets lifted alongside the market, because remember, when the market shoots up, everything gets lifted with it. You get a short squeeze. The most heavily shorted stock, you get a short squeeze in it. If you thought the short squeeze in GME and AMC were it, it's not. The real short squeezes, the real pumps, 300% gains, are in bear markets when markets start coming out of a bear market. And that's what you have going forward. Pharmaceutical stocks, anything that has been beat down, will probably benefit. And you will notice the 300 and 1,000% gains in penny stocks. So if you're a penny stock trader, this is your time. But if you're a futures trader, futures and penny stocks react the same. So it doesn't matter. So here is where we stand. Investors need to know when inflation starts decreasing, you get a market push, but does that mean a recovery? No. What it actually means is the market is factoring in futures expectations of inflation to come down further. But then as we get closer to the time where we expect inflation to come down, because maybe next month we won't get inflation down, we might have inflation up. So you might have a retracement of 80%. And if it's not that, then it's earner reports. Earner reports comes out shy of expectations or not performing well. You also get a retracement of 80%. So you will notice an uptrend zigzag forming slowly in the market. Big push, big dump. Big push, big dump. Till earnings start getting out and coming out steady and inflation fully comes down to the 2%. And that's when you have a full recovery. So what does that mean for investors? Well, by the time you notice inflation come down, by the time you realize earner reports are good, you probably lost 30% already. You missed out on 30%. So that's why I've always said to you guys, begin scaling in. Because even if you invest in the worst performing stocks, you'll probably make 20 to 30% going forward. Let's take these two stocks, Robinhood, Coinbase. Robinhood, Coinbase, they look flat. You see, it looks like the bottom. I remember taking a trade like this back in 2015, where I also noticed a stock that was bottoming out, ended up buying. Next thing you know, a few days later, it came down. I ended up getting stopped, then shot back up. So this flat line here does not mean it's the bottom. No, it doesn't. It means there's one more push before the pump. So do not get scared if you see that in your own stocks. Just be prepared for it mentally. That's why we scale in month after month and adapt the monthly investment plan. For day traders, well, the volatility is coming your way, guys. Back in the day, we used to trade earner reports. Well, we're back to trading earner reports. This is the time where earner reports will make more sense. But just remember, if you notice a negative earner report, well, it was probably factored in the last report, because right now what's happening, most stocks are probably factored in the negativity, right? And most stocks are below their value. If the actual value is here, and here is the stock. The other report comes out. It's not as bad, right? Because investors already factored in the worst. That's why they pushed the price here. What do you think is going to happen? Well, it's actually going to go up. So it's not going to come down because of negativity. It's actually going to shoot back up. Prepare for that scenario, guys. Back in the day, a lot of people would get confused, like, why is the earning report negative and the stock is skyrocketing? Well, it was factored in. This is a sign of us coming out of the bottom. So, for investors, you're going to see a lot of profitability coming your way. If you've already started investing, of course, swing trading even. And as money flows from the crypto world, because it just becomes dry, money will flow into the stock market. So you have more increased retail volatility. So that's really what's going to happen. Inflation comes down, markets shoot up, then we go a few weeks sideways, then down 80%, then back up, then down, then back up, till we get to the top one more time. That's going to be the cycle. And for day traders, you need to be aware of that. Of course, we will hit resistance lines where sellers will be waiting to take profits from the bottom. Those are the short-term investors and swing traders. And then it comes down and more batches of buyers will enter the market to try and buy in more. So just remember, what's about to come your way now is increased volatility, short squeezes, and investors, you're going to notice a big jump in the markets and a big dump in the markets, but it won't break that specific level, which is the lows of the lows. We might come down initially to test the final one if inflation shows some signs of increased again. But other than that, I believe in the 2023 recovery based on what I just told you here. And I've seen this recovery before because that's exactly what happened in 2015 when we came out of a bear market as well. That's me done, guys. Hopefully you enjoyed this. Smashy. Let me know if you enjoyed these kitchen table talks. We'll try not to go over 8 minutes here. Peace.